Why do you need DeFi insurance? I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Dan Thomson of InsurAce and Rupert Barksfield of Amulet Protocol, two companies working on DeFi insurance in this ever-growing DeFi space. Gentlemen, welcome to the show, and thank you for taking the time today.
Thanks.
Awesome. I would love to kick off the conversation with just a little bit on your team's protocols and what you're working on and why you think DeFi insurance is important. Dan, I would love to start by hearing a little bit about InsurAce.
Sure. I'm Dan Thomson, CMO at InsurAce.io. It's the first multi-chain insurance protocol in DeFi. We are deployed to 4 chains that cover up to 20 different chains, and on those chains we cover about 140 different protocols.
Wow.
To date, we've covered about 350 million worth of assets and have had the largest payout in the history of the space, with 11.7 million paid out for UST depegging. Insurance in DeFi and crypto as a whole is important. I mean, there's a real demand for it, and there's just a huge amount of exploits and lost funds in the space. I mean, anyone who's been in this space for long enough is likely to have had an event where they had a loss of funds through one way or another, and I'm sure having gone through that, they would appreciate some type of insurance. So that's what our mission is: it's to make the space safer, make crypto and make Web3 safer for everyone by offering these type of insurance products.
Mm-hmm. Wow, that's quite the wide coverage, and congratulations on that, on payout and supporting people that are in DeFi. It's becoming less and less of the Wild West when people have insurance to cover these various hacks, exploits, which we can get into sort of the details, because there's a lot of different ways that people can lose money in DeFi. Now, Rupert, could you talk a little bit about Amulet, what your team has been working on, and your take on DeFi insurance?
Sure, absolutely. So, I'm Rupert from Amulet. I'm the project leader at Amulet. We are a DeFi insurance protocol. It's specifically operating on the Solana ecosystem, but we work on the wider Rust ecosystem as well. We launched a little over 4 weeks ago. Now it's actually our year anniversary this month at Solana Breakpoint. We're exhibiting that right now, which is why it's a bit of background noise, forgive me. In short, we insure 5 different protocols right now for smart contract risk on this Solana ecosystem. And what we do differently to the other insurance protocols out there is the way that we manage our staked capital and staked assets. We actually take staked assets, put it into a Solana proof of stake validator that's generating yield, and then we pay out our claims that come into the protocol using that yield as opposed to the principal staked assets. Mm-hmm. And so that differentiates us from some of the other folks in the industry. But in our view, more insurance is better than less. I think in the industry, you've got around 0.5% of total assets or total ABL on chain that's actually insured. That's a huge chasm of risk. And if you look at traditional finance, Goldman aren't going to do a deal with JP unless it's insured by Lloyd's, or they're not going to do a deal with somebody else because of another insurance broker being involved. Which is why TradFi has a massively high percentage of insurers versus the amount of capital pushers in the space. Versus DeFi, we're in this tiny percentage right now. So we've got a huge opportunity to grow, and there's plenty of space for everybody to play.
Mm-hmm. I completely agree. There's a lot of opportunity, and I feel to grow, especially in DeFi. I feel like a lot of people still don't understand the importance of DeFi insurance, and everyone sees, it's been audited, by some kind of firm, that they don't really look into that either. But they're like, that must be good enough. It must be safe. I'll just throw the majority of my life savings into this sketchy protocol because it's been audited by somebody that I didn't check into, not thinking, well, what happens if there was a glitch or something in there, and where's the insurance? Can I get a payout afterwards? They're still not really thinking about that. And Dan, you mentioned,
In fairness, it's sorry, just to follow on that, Ashton, it's like it's not the user's fault either, right?
Yeah.
How many times do you look at the auditor for Citibank or Bank of America or whoever it is? Like, you never think about this when you're on their app. You never think like, oh, is this going to be okay? Like, it's purely an issue that now exists in DeFi because of the hacks that were happening. So the auditors came in to say, hey, this is okay, we'd like stamp of approval, but then there's grades of the auditors, right? There are now good auditors and less good auditors. There are shady auditors and really super clean folk out there, and that's really difficult marketplace to navigate as well.
Definitely, great point.
I mean, I'll go one step further with that as well. I mean, I think it's Hacken, who we work quite closely with as well, who identified that something like a third of projects after they've been audited don't make the required updates. So it's not just whether or not they've got an audit, it's the fact that the teams themselves are not following up on the requested changes from the auditors. So the auditor is actually finding these issues, and the teams are just not necessarily ignoring them, but not updating them before. Maybe they're under pressure to launch on time, or they've got a set date, or whatever the reason is. But there's not enough accountability to teams to follow up, and then that puts the onus back on the user to be able to understand the audit and the code to check to see whether those patches have been made, because the auditors don't do a follow up afterwards usually. So the audit gets published, and everyone just assumes because of an audit, therefore it's safe or safer. But the reality is actually most people won't read the audit. They won't check whether or not the actual patches have been fixed. And a lot of teams have just been extremely lazy about this and not made the required sort of updates to the project and protocol to address the issues.
That's a great point, Dan. And what it seems like in DeFi is a lot of these projects are sort of rushing to launch. They feel like there's if they don't do it tomorrow, the opportunity will be gone, and really not thinking in the long term. And same goes for the people that are putting their funds into new DeFi protocols. Often the yields and the APYs will be really high at the very beginning and sort of dwindle down. So if you get your funds in the first minute, before even reading the audit, then you're going to get a higher return. And I think it's like on both sides, it's like a recipe for disaster that everyone's like, we need to launch right now. And as long as we can put the little audit symbol on our website, then that's good enough. And I think people are now starting to understand that, over all of the projects that have had hacks in one way or another, DeFi insurance to actually cover you if something happens is like becoming a necessity.
Yeah, 100%. And what we're seeing on our side is actually it's not just users wanting to buy insurance. We're finding that institutional firms that are wanting to buy a lot of insurance. And then beyond that, it's actually protocols themselves, right? They want to work with these large institutions. So we're working with a customer at the moment who is working with a huge institutional firm. They usually, they're like a color that's quite dark, and they work with stones. I don't know if that gives an indication of like which firm they might be working with, but that firm wants to deploy a huge amount of capital into them. They then want to deploy that capital into another protocol, and both of those systems have smart contracts in place. And the client is saying, like, if you get smart contract insurance in place, we'll happily do that. But until you've got that, we're not deploying a penny, because there is, we read the articles, we see the news, like we understand the issues that are beyond price risk. Price risk we can handle, but let's look at the risk of actually all the funds just being taken out of the system. And that's something that they can't handle, right?
And Dan, you mentioned different ways to cover, there's sort of different products in insurance, and DeFi is supposed to be getting safer, yet in the last month, in October here, it was like setting a record for some of the most hacks and exploits in DeFi. I think there was over $700 million was siphoned out of these smart contracts, which is an insane amount still. But each of the hacks, there was like a handful of different hacks of different protocols, different smart contracts on different blockchains as well. And each of them was a unique situation where, in one it was a bridge, in one it was not really a hack, but it was an exploit. And there's different ways that people can lose their money. How do the DeFi insurance protocols like InsurAce sort of cover all these different scenarios? I feel like in traditional insurance, there's always like a lot of fine print of like, well, if this happens in this way, then we'll cover you. But if something else happens, then we don't. So how do you sort of cover all of the different potential scenarios in DeFi hacks?
Let's answer in one go there. Okay, so in terms of the actual types of products available, at the moment the vast majority of DeFi coverage is available for smart contract risk and also stablecoin DPEG risk. There's demand for things like market volatility, for rug pools, for bridge insurance, which no one's really released anything for that yet. So there is still a huge demand for new products, and there are different people working on different types of insurance for different aspects of the industry, whether it's private key loss or sort of your actual physical ledger being lost somewhere, all the way through to the DeFi side. There's people working on NFT insurance, metaverse insurance, GameFi insurance. Not everyone's out yet. The biggest problem facing the DeFi market in particular is capacity. We're limited by the amount we can actually underwrite. This isn't actually too dissimilar to natural disaster insurance. Natural disaster insurance is sort of low frequency, high severity. Now, obviously, you can't insure against a huge hurricane, for example. You can't insure everything that's going to be there. Whereas, so I think this year alone, after Ian, was it? Something like 230 billion was done in damages, and less than around about 100 billion was actually covered through insurance. So, in the same sort of situation, the insurance is always going to be lagging. And arguably in crypto, it's the same thing: high severity, low frequency on particular types of products and particular exploits. Now, that doesn't mean there's coverage available for everything, which is sad, and that's what we were working on. However, that the actual hacks are not going to be slowing down. Yes, there are things that projects can do and investors can do to be safer about it, and doing their own research and being more secure from the product side. You can look at bug bounties, white hat, and private. You can look at audits. You can look at how many different layers of security you add in. But at the end of the day, for me, the hacks generate innovation. Some of the bigger hacks are usually some of the more creative ways of exploiting, and then after that, they don't tend to happen again. Whereas some of the small hacks seem to be, the same type of hacks that for some reason people just haven't patched up. So a lot of the smaller hacks that happen every month seem to be the sort of like cool, someone can actually just manipulate the call function and change the address that withdrawals are made to. It's a relatively simple bit of code, but yeah, it seems to happen again and again and again. So on the big side, even though these hacks are getting bigger, because when they do because there's just more value in the space, right? So they do seem to be getting bigger and increasing, and October was the largest, but at the same time, from what we can see in the industry, it's not slowing down the builders and it's not slowing down the demand because of this. I mean, obviously there are other external factors, but the hacks are not people's main concern when it comes to investing in this space.
You're right, and that's great to hear, because DeFi, it truly is innovative, and you can't. It's like sales calls. You can't just give up if somebody says no. You have to keep going, keep innovating, and keep fixing these problems. And eventually, it should be just as safe as traditional finance, or even safer, because of not having these third parties to rely on, and having sort of the decentralized payouts and sort of guaranteed protection. And I noticed one of the biggest hacks last month was on the Binance chain, and it seems like DeFi is growing on, just as strong on Ethereum, Binance, Solana, and these other chains as well. But one of the, I guess, still pretty large, but the smaller exploits was on the Solana chain with the Mango Markets exploit. And it wasn't really, I don't know the exact details, but it wasn't like a hack. It was sort of a manipulation of the market. Rupert, you're sort of in touch with the Solana there. Maybe you know the story, and could Amulet have helped with that?
Yeah, so it's a really difficult one, and this is, I'm coming back to the question of like, there's always fine print to stuff. I mean, we make our print very big, but our print is very clear. It is smart contract risk. Like, unless the smart contract is broken, then it's not an insurable event. And so with something like Mango Markets, we were selling smart contract risk. We actually ceased selling that particular policy whilst we're looking at them and making sure they got complete and making sure that everything is still okay. But we had a tiny exposure on our smart contract risk insurance, of which we would have been more than happy to pay out had there been a smart contract breach. What actually happened with somebody like Mango is that they actually posted in their community about this flaw, about the manipulation of certain smaller assets could enable somebody to come in and manipulate the price of the token and essentially liquidate out a whole bunch of contracts and make money. This is exactly what the attack did. And what is difficult about this is that everybody is labeled a hacker. Everything's labeled a hack. Now, it's not a hack, and actually there's certain, most of what he's done is not illegal. There are questions about whether or not there are some illegal functions that we did in terms of price manipulation on the centralized markets, but certainly on the decentralized space. As far as I'm concerned, and by no means is this financial advice or taking a position or side, but it doesn't look like it was an illegal thing that he did. What he essentially was able to use a huge amount of capital to control the price of the market, liquidate a whole bunch of contracts and make a lot of money from that. Then he went onto the Mango Markets DAO, created a proposal for himself to pay himself out of the foundation capital if he gave all of that money back, and if the DAO agreed to not press charges. Because he held so much Mango at that stage, he approved his own governance proposal, and so it was a whole farce, really, the whole thing. But this was a post that they put on the Mango Markets community. They recognised it was an issue. They were going to fix it from V4, and but they up until that point they didn't recognise it as a big issue. And it's not actually that dissimilar to Luna and UST, whereby somebody really needs to do an enormous short and create a huge amount of FUD inside the marketplace, and then kick off that retail cycle of selling to create this, the Luna shooting down to zero, and USDT pegging, essentially. Everybody knew that this was a problem. I say everybody, like certainly us within the industry, we were very aware of this being a potential issue. It was well talked about, well documented from the forums and the community. But it was an accepted risk insofar that nobody's going to do that. Like, it's such a big amount of money. You need hundreds of millions of dollars in order to do this attack. There are very few individuals in the world that could, or organizations could, but one of those organizations did. And they made a phenomenal amount of money out of it. And you can argue, like, they've destroyed multiple lives. They've also made a lot of good ones for their investors. Like, there's always two sides to a trade. But look, we're not talking about trade. We're talking about whether or not an event could be insurable. Market manipulation, I don't think, could be an insurable event. Unfortunately, and what I think we have to do as an industry is to really start wrapping up packages of insurance to start really protecting people. It's not just about smart contract risk. If you've got exposure to a stable coin, then it's about wrapping that into it as well. And then potentially maybe there's a wallet risk or custodian risk. You've got to wrap all of these insurances into it. Downside with that is the cost of the premium of those insurances versus the amount of yield you're going to create out of whatever strategy you're going after. So it's a tricky balance, but the traditional financial industry, as I mentioned earlier, has been through these growing pains, and we will go through it as well, and we're all going to make it, as the kids say.
Yeah, and you're right. It's not something, it's like it was known that it could happen, but when somebody has a lot of capital and they sort of game the system in a way that was like, it was sort of legal because it was in it was possible with the contracts, and normally things like the Bitcoin blockchain, it sort of has, these 51% attack protections, where it's like if somebody has a lot of capital and they sort of use it against the system, then it hurts them. But it's early days in DeFi, and sometimes that happens. But I feel like that's another scenario where moving forward, all the insurance companies can eventually make products that could cover that. Well, it's like, hey, this could potentially happen because it's happened before. There's a precedent, and now we see that that's something that we could cover you for, because the first time it happens, we didn't know that was a scenario, and now we'll sort of cover you for that. Now, Dan,
to round off on that, we're built as a protocol to build out any insurance product in the future. Now, right now, we're controlling that kind of flow and creating those products, because we know what the demand is in our ecosystem and what people are asking us for. But the future of certainly in the Amulet, and I think many of the DeFi insurance protocols out there, is the ability for anybody to create an insurance product and then get anybody to underwrite the risk on that insurance product. It shouldn't be so difficult to create an insurance product and go through a whole bunch of brokers and actuaries and this and the other. You should be able to do it with the system. And I think that is the future.
Definitely. And I was just going to ask about that, Dan. Compared to traditional insurance, say something happens and you have to call the insurance company, wait on hold, and talk to them, and they determine whether you're getting paid or not. DeFi insurance and making it a decentralized nature, I'm guessing is a little different. They probably don't call you up and you personally approve the claim. Can you talk about why the decentralized insurance is better and how it's different if something does happen and people need to get a claim and get funds back?
Yeah, sure. I mean, it's the obvious difference is that everything's on chain, right? So you have your cover on chain, so that you can see that any time once it's been purchased. You can then submit your claim in the event of a loss, a claimable loss, and then that would go through to essentially the DAOs to vote on the validity of the claim, and then the payout. So in traditional insurance companies, I don't think anyone has been. I don't think there's anyone on the planet who's only ever had good experiences with insurance companies, whether you're stuck on the phone or whether or not just hassle, whether or not you're stuck with a huge deductible or excess in the UK. So it's, I think we try and make the process a lot better here. It's on chain, so it means that as soon as you submit your claim can be voted on by the DAO, and anyone who's participating will get rewarded for voting as well. That's heavily publicized as a public claim, public vote. All the information is transparent. If required, then an expert team would also review and submit a report on it. But otherwise, the claim is a fairly automated process that involves the community voting on it, so that along with an appeals process if required, but it allows a very transparent and also very fast and efficient system for communication and payouts, because in the event of an accepted claim, the payouts are immediate and straight to a nominated wallet. So it means that even though, yes, some details are slightly more public, so maybe there's things that you maybe wouldn't want to know, like, you can try and remain anonymous with it, but at the end of the day, your wallet will be identified as a wallet that held X amount of capital in a particular protocol and got hacked. So there are some publicity concerns around it, but at the same time, it's a fair judiciary system that allows for a quick and swift payout in the event that you've actually experienced a loss. And for example, with our payout for the UST case and the DPEG there, the entire thing was the first of its kind, essentially an entire ecosystem collapse. There were many different sides of it. Different people saying it's a manipulation. Different people saying it's a rug pulled from Do Kwon and the Terra team. And in the end, the team, the DAO system did vote to say that it was indeed, a DPEG event and a legitimate one, which means that the consumers were paid out. And despite the fact that it was the biggest payout in the space, and still is to this day, even then, the entire process was completed in less than a month. Now, try and go and get some high risk new products in traditional insurance to pay out in a month, and you'll be lucky to be still not dealing with it in court speed a couple of years later. So that's the real difference here.
That's incredible, and yeah, it's a tedious process, and even if the DeFi style insurance can expedite that and make it less of a hassle, while also making it more transparent, I think that benefits all. So that's great. And now, Dan, we don't have a lot of time left, but for people that want to sort of look into, they're using DeFi and they're like, maybe I should be looking into insurance, what is the best way for them to sort of learn more about it and start using it?
There's a few different resources online. You can visit either, our app, or I'm guessing Amulet as well. Likewise, there are a few good aggregators out there for checking the difference between insurance protocols. You can look at things like Bright Union to compare prices and covers. So there are also, aggregators out there and comparison sites that exist already as well. So there's quite a few different resources. I'd still say, do your research, check into the actual policy wording, make sure you're understanding what the risks are, and maybe just include it in an investor checklist. I mean, it's just a common sense addition there. Obviously, people will have, checking whether there's an audit or a bug bounty or a team public or anonymous, those kind of things. Does it offer insurance? Should be on that list as well.
Definitely, I completely agree. And thank you so much, gentlemen, for the insights into DeFi insurance. I feel like this should be and will be the status quo, on the next DeFi run, in the next bull cycles, when DeFi grows exponentially and bigger than the all-time highs of the last cycle, because I know that will happen, and I think it's best for people to be prepared with an insurance protocol to protect their losses, because you just never know. I will leave the links to InsurAce and Rupert as well. I'll leave the link to Amulet and follow those updates in the description box below for the viewers. I appreciate your guys' insight and best of luck on your team's initiatives, and let's definitely follow up in the near future. I'm looking forward to speaking about this more.
Awesome. Thank you, Ashton. Speak to you soon.
Thanks, Ashton.